NaluFM Finance Podcast. Insight into the financial markets.
The main point is the technology is definitely revolutionary and it will change our world.
This podcast is powered by Vestr, the engine behind active management. Vestr is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vestr, Vestr.com to schedule a meeting with an expert and to learn more about Vestr.
Thank you. I'm here with Adrian Marcu, the head of investment solutions at Belvoir Capital, to speak about decentralized finance. Thank you for having me.
Thank you for letting me be part of your show.
Thank you. Now, let's start for everybody who's listening. What actually really is decentralized finance and why should it matter to anybody?
So DeFi should matter and will matter to everybody because it's totally revolutionary and a total new way of organizing markets. Financial markets, yes, but any market could be organized in the future and will be organized in a decentralized way because anybody will be able and can participate by just simply connecting your wallet to a decentralized smart contract, we call it, or a decentralized market. So anybody can participate. And the very revolutionary thing about it is you can find a price, you just have to connect, and you can do instant settlement. So not only do you trade very easily by connecting your crypto wallet or whatever wallet it is to this protocol where you have two assets that you exchange against each others, but as soon as you have traded it, you can settle it in your wallet, disconnect, and take it away with you. So this is a totally revolutionary thing because in the old world, we had to trade. We needed institutions to verify a trade. We needed institutions to settle in between. You needed to wait, usually T+2 in most assets classes. So this is a totally new thing. And there are other arguments as well, like no counterparty risk, etc. But this is the main point about the new thing of DeFi.
And how can people profit then or benefit from the use of DeFi?
So the whole idea is to compare to a centralized market, to just be able to, if you want to trade A versus B, Ethereum versus Bitcoin or whatever, you just connect your wallet, go there and trade it. Now, in order to trade something, you need liquidity. So the idea is great. It is working already, but you need to attract people who add liquidity into those new smart contracts. And those people get rewarded. We also do this at Belvoir with one of our products by simply adding Bitcoin, Ethereum, or in our case, stable coins to a smart contract. You simply wait until people come in and want to trade, ask for this liquidity. And whenever they trade, you get a reward, usually in the form of a fee. And this is similar to a market making in the traditional markets, but anybody can participate. You don't need high tech. You just need to add your assets to those protocols.
I mean, that's the interesting thing you mentioned already. You launched a product on decentralized finance. What are the different sources of alpha that you basically mine or stake in other things you're doing or lending? What is it, where do you generate the return from?
Right. The idea in our case, where we cover also a niche of the DeFi, we're not using or applying a strategy that is covering the broad DeFi space. What we do is there is a need in the market to exchange stablecoin against other stablecoins. So maybe you are aware there is Tether or USDC or Binance, USD, BUSD. They're all stablecoins and they are there for their own reasons. And what we do is we provide liquidity for stablecoin versus stablecoin for people who need to switch from one into the other. So in that case, we really have no exposure to the market per se, to the crypto market. We leave our capital or the client's capital in this sense in the stable coins, and they don't really fluctuate a lot, but we get rewarded. And it's very similar to being a market maker in the traditional markets. Just the concept is different. The technique, how a price is being fixed or traded every second, is a bit different from a logic, how the book is being built, etc. But the principle is very similar.
Now, you mentioned something I think that's quite interesting, because a lot of people associate with cryptos going up. Bitcoin went and down and went up again and a lot. But that means you have very little exposure to the broad crypto pricing market. But how do you then look at your risk as an investment? How do you measure your risk? It's traditional things like volatility or Sharpe ratio don't work.
They would work. So it depends. In the traditional world, if you would say I'm a market maker for US dollars versus Hong Kong dollars, you could also argue there's no risk because the currencies are pegged, they're barely moving, but you can still earn a buck because you're a market maker. If you are a bank, if you have access to the clients who demand liquidity, same thing here. So you could say we have some specific risks in our product, and they are typically, number one, the stable coins itself. Are they really as stable? Is the peg going to hold for a long time? So this is a specific risk, which we look very deeply into. The second thing is the liquidity risk itself in the particular smart contract. You should be able to get out at all times, basically, but there are exceptions. The third typical risk of DeFi and smart contracts, which is not existent in the traditional world, is hacking risk. So those protocols need to be programmed in a way that they don't get hacked, or usually will not get hacked, won't get hacked. And there are ways to check this. There are audits, IT audits, they are experienced. The codes are open source, so you can look into them. Mm-hmm. But this is a typical risk that is not existent in the old world. And this is important to respect. Other than that, you asked me for the risks. We would apply also Sharpe ratios or volatility risk as well, or market risk, if we would have it in this sense. But in our case, our very special case, this is not the case.
You mentioned that you try to generate a steady return, and try not to be exposed to the big swings that often the crypto market is associated. So how do you achieve this, that there's no price risk to the broad crypto market?
So especially in the DeFi space, there is a natural need from market participants to switch from one stablecoin to the other. Let's say USDT to USDC or Binance, BUSD, etc., for several reasons. And we are covering this niche basically and this need because we hold the majority of our collateral within this strategy only in stablecoins. And we provide liquidity within the smart contracts or DeFi in this space. So the only thing we're doing, we look where is the need for liquidity, on which blockchain, on different blockchains we are in different smart contract protocols, and we allocate only stable coins to all those protocols. And this is the reason why we don't have really price exposure at all to the crypto market. And we earn fees and basically generate the returns exactly in this way.
Just for the benefit of some of our listeners, what is actually exactly a stable coin? Because we use that word all the time, and maybe not everybody knows it exactly.
That's a very good question. A stable coin, and it sounds a bit stupid to be honest, is a coin or a token that is pegged to a fiat currency, usually the US dollar. Now, many people ask, why on earth do you need this? Because I can sell my crypto and go to fiat straight away. Now, the reality a couple of years ago was that when people sold Bitcoins, when they traded it off exchange, on exchange, and whenever they would like to transform it into fiat, into US dollars or euros, they would book a transaction at their local bank. And the banks were very suspicious because they have their rules with KYC and anti-money laundering, and they were blocking and making lots of trouble. So people could not easily de-risk and up-risk their positions by just selling their cryptos against dollars. It didn't really work that easy. So some smart guys came up with the idea, okay, we collect all the dollars basically and issue a stable coin so people can anytime stay within the crypto universe but have a zero risk. And this is how stablecoins emerged. And you have several ones. These days, you have a couple of stablecoins which are called algorithmic stablecoins, which are not covered one-to-one by fiat, but they are collateralized, etc. There are different models. And it's good for us because there's competition in the market for stablecoins, and we are providing liquidity in different stablecoins. And this is one good reason why we earn fees and returns.
Interesting point. You mentioned that there's different methodologies. Some are pegged, some are bagged. There's actually the dollars are probably there, but some are only partially there. So I guess that goes into your research before you invest.
It does, and I wouldn't even say that one is better than the other. So there's a big discussion, obviously, for Tether because they become systemically relevant. The Fed has even seen a reason to talk about it, which is pretty unique, I say. The assets behind Tether are north of 60 billion. I think there are 70 billion now. And the big question is, what are they holding behind? And they have commercial papers, cash, treasuries, etc. And this is why the Fed is a bit worried, because if there would be a run on Tether, then the Fed is not sure if they could liquidate all the assets behind it. And others are more regulated. USDCs, closely connected to Coinbase, so they are more regulated. Others, again, say, okay, we just cover it with other assets and have a ratio behind it. So, yeah, we'll see how it evolves.
If I'm not mistaken, you decided to launch this product as an AMC, as an actively managed certificate, not as a fund.
True.
Any reason specifically?
Yes. So the basic reason is it's easily accessible for anybody. You can buy from €1,000 up, upwards. You can buy it through the exchange, full stop, and there you go. It's very easy. Fund has advantages. Usually, you could not structure such a product in a highly regulated fund. Hence, you would only be left with offshore structures, which are okay in principle, but usually only available and really good for more sophisticated investors. And they are usually much more expensive. And we decided to make it really easily accessible to all, even retail clients, if they want, through the exchange, and we found this a very good solution for the time being.
Excellent. And you're happy with it at this point in time?
We're very happy, yes. Clients must be happy.
Obviously, that little bit leads me to next one. How long has it been running now, and how has the performance been?
So the last price was up only 2%. So it's maybe interesting to know that our overall expectancy of the performance is 8 to 12% per year. Yep. So highly conservative and totally untypical for people in the crypto world. Everybody's looking for crazy moves up and down 20% a day.
Crazy.
No, we don't have this intention at all with this specific product. We have the intention to really deliver a very, very boring but steady return month by month. So we're up 2%. We're only live like 3 months now, really.
So you're on track.
So at the moment, knock on wood, we're on track, yes.
And I mean, it's quite a new technology, but a lot of development is ongoing. Are you expecting certain things to affect how much yield you can earn there? What's going to happen in the future, and what do you expect to open up maybe as new opportunities?
Absolutely, yes. So this is a race or a equilibrium, I would say, between demand and supply, of course. So on one hand, the more capital flows into this topic, the lower the yields will be, because more people will provide the liquidity. On the other hand, if the growth stay as it used to be until, let's say, at least November of last year, then we should face another 2, 3, 4 years of very, very attractive risk-adjusted returns here. I'm not worried at all about this. So I think we're well positioned there. But we'll see. I'm not so optimistic about the current crypto market in general, which will not hurt our specific approach. But it is totally normal to have a clear retracements in crypto markets as well. We've seen this since the emergence of Bitcoin 4 or 5 times already on a mega cycle basis. And I have a little bit the feeling that we're on the down move at the moment, which may take another 3 to 6 months. Let's see. But this should on the other hand, be quite good for our niche product in this case, because people who want to stay on the sidelines have a good alternative to really park and earn on top something, especially in times where fiat money is zero or even negative interest rates still.
I mean, a lot of people talk about crypto right now, and some of the opinions are quite polarized. But is there something you would like to debunk about crypto that, often people claim, but it's actually not the case?
Oh, there are many things. We'll see. I mean, so many things. Are you thinking about something specific?
No, but up to you.
Well, you have to be careful. There's so many different crypto projects out there, and it is really easy, relatively easy, but on the other hand, important to really filter out the nonsense stuff. So I have to be open there, and 15,000 different coins or even more, there's lots of nonsense out there. We all know it. It's nothing that we're not aware of. So try to look at the promising...
But nothing changes sentiment more than price. So the minute it moves, everybody gets excited about it, even if we know it's nonsense.
Very true, very true. But the parallels to the internet and .com bubble are really there. Let's say 1998, 1999, many people knew that many stocks will be worthless, but everybody was happy to pay the premiums and high prices because it was clear that a few companies or projects will be the long-term winners. So people didn't care. They say, let's buy a whole portfolio. If I have to write off 80%, I'm still fine. Same here. I mean, you can try to apply stock picking or coin picking methodologies. There are sensible approaches as well. We don't do this at the moment in this case, but it's a very, very similar pattern here. And the main point is the technology is definitely revolutionary, and it will change our world. People will have a totally new concept of exchange their own assets, own their own assets in their own wallets. The custody of coins will be totally different understanding, and much more fluid, which will, on the long term, increase the economic efficiency.
Now, something completely different, which I always like to ask everybody, and it's, what are you up to? But at least 3 favorite finance movies, and why would you recommend them to the audience?
Well, I'm maybe not the youngest anymore, so it must be the Wall Street.
Very often it shows your age by the time you get to this point, when you have to say what movie.
So it is, of course, Wall Street. And I have to admit, Wall Street is probably one of the reasons why I landed in financial industry at first place. I used to work for banks for over 20 years as a market maker, a trader, derivative trader, foreign exchange equities. So this was very, very exciting to me. And I'm sure this was one of the reasons. But a New York movie was, of course, The Big Short.
Yeah, I love
so
that.
The Big Short was fantastic. It was really describing the situation of the subprime crisis in an interesting way, and probably pretty true, I would say.
I would say majority was very close to the truth.
Yeah, so I really enjoyed that as well. And again, I used to be a derivative trader, and I'm very familiar with risk in a way, how it is important to understand the risks before you put them on the books and before you run a strategy, because only then you know what to expect and how to react when the problematic situation really happens.
Excellent. Most important question right at the last thing is how to contact you if one is interested in your DeFi product.
Visit us on www.belvoircapital.com or send us an email on LinkedIn. And we're here anytime for anybody who's interested.
Perfect. Thank you very much.
Thank you.
NaluFM Finance Podcast. Insight into the financial markets.
This podcast is powered by Vestr, the engine behind active management. Vestr is a Switzerland-based fintech startup that provides software for issuers of actively managed certificates to automate their value chain fully. Visit Vestr, Vestr.com, to schedule a meeting with an expert and to learn more about Vestr.